Good morning, guys. It is 8:53 on Wednesday, the 22nd of June, 2022, and I thought I'd just start off with this view set to a 1 hour time frame. The reason being, I was talking to somebody else just yesterday about investing, and he seemed interested, and this was the initial view I think that he saw. And as you can imagine, he kind of seemed to look at me as if I was completely nuts. But of course, until you understand what you're looking at, that looks pretty poor. So let's take it out a bit. We'll go back to the usual way I look at this, which is the 1 week time frame. And if you look at that and then kind of take it back a bit further even, and you can see where the market was, where it went to. You can see the COVID effect. Whoops. And then you can see the recovery after COVID, the kind of market running away with it, and then just recently the pullback. Still not sure if it's right to call this a recession or anything like that, because as things stand, if we follow this blue line where the current value is back, the last time that it was around that value for sort of any length of time that you would call fair value, I suppose, was June last year. So as things stand, the market basically has thrown off any gains made in the last 12 months. And as we know it, it'll recover. And as I said before, you've got this sort of trend here. And then, as I said before, the gap really between where the market would be if it had continued on the trend and where it actually is what I like to call the potential or the opportunity, if you like, where basically everything is on, well, not everything, but this ETF is on sale, in effect. So let's go ahead and see what change we can make to our average price this morning. Currently the investment is worth 1,200 odd. It's down by almost 8.5%, and the average price today 62.73 near enough. So we will buy our weekly £120 worth of the ETF. And execute that. So that has gone through. So there's the change. The average price now is 62.25. So it has moved a little bit. And I suppose ultimately the effect of that is that when things recover, it'll our figures here, so now we're sitting at sort of minus 7.8%. So as we continue to invest, the green line will come down a bit, and then whenever things recover, we'll more quickly be in profit, so to speak, than we would have been if we had done nothing. And I think that's why excuse me, that's why the dollar cost averaging effect is important and useful. And obviously, as you do that, you continue to grow the number of stocks and shares in your portfolio, which ultimately at the end of the day is all important. Guys, thank you for watching. Actually, just to note, You can't see it on this. Yesterday there was a little bit of a rally. Let me just set that to a 1 day and see if we can see it at all. You can kind of see, well, yesterday the market kind of came back about, was it about 1.5%, something like that. It did come back a fair bit. It seems to be throwing off most of that gain currently, but time will tell, and we'll see where it goes next. Have a great day, guys.